Are you tired of worrying about your 2023 farm profits? Take control of your investments and maximize your returns. Let Advanced Trading help you create a marketing strategy to protect your investment and reduce market risk. For over 40 years, Advanced Trading's non-predictive approach has helped farmers secure and extend profits regardless of market volatility. Our team is positioned to help you make the most of 2023. You never stop working, and neither do we.
Good morning. My name is Drew Moore. I've got Brian Basting and Nathan Mangold in here from out on the trade floor. We just received the September stocks report, and it looks to be a little red on the screen right now. D's corn is down 8 cents. Nov beans and December wheat are both down 23 cents respectively. So not a friendly report to nearby prices, but we'll get into it here. Nathan, first question for you. A lot of numbers to digest. What was the big takeaway in your opinion?
The biggest takeaway for me initially was you look at the spring wheat yield jumped to 46 bushel from last month, August, 41.8 bushel. So we took total spring wheat crop to 505 versus last month's production number at 450, so a 50 million bushel jump there. Mm-hmm. And we're just chatting here before the report that, we did see the spring wheat crop in general maybe a little bit of a lower pro crop, which maybe tends to lean towards a little bit of a higher yield, and so we definitely saw that in this report. Sure. So the Minneapolis KC spread might have to do a little work as spring wheat tries to find demand.
Right. Thank you. Brian, looking at Q4 implied feed use and taking the corn stocks number that we just received, what does that mean for the first half of the marketing year here?
Both corn and, as a matter of fact, feed for wheat this summer, Drew, exceeded expectations. Starting with corn, the carryout implied that corn feeding in that fourth quarter, waiting for final numbers, of course, for ethanol and exports,
sure,
maybe close to 100 million bushel above expectations. Somewhere between 75 and 100 million bushel above expectations. So maybe these lower corn prices in the summer starting to get the end user attention there.
Right.
I would say at face value that would support a good start to the SON feed program. Obviously we're seeing some weak prices here as harvest gets underway.
Sure.
Throughout the Midwest here. So I would say the first half of the year, we'll just have to kind of wait and see how the South American crops shape up there in Dec, Jan, Feb, and so forth. But I'd say definitely for the first quarter of the year, corn feeding looks optimistic for this fall. Sure. Wheat feeding was surprisingly strong this summer, Drew. Part of that maybe as Nathan did a terrific job of summarizing the larger than expected spring wheat crop. Right. I haven't had a chance to look at the class breakdown yet. However, overall the wheat feeding in this summer was about 225 million bushel. Last year, Drew, was closer to 145. Right. So about a 70 million bushel increase in wheat feeding, or about 50% from last year. So these cheap wheat prices, as Nathan again highlighted, searching for demand. And maybe they're finding some demand on the feed residual, but boy, it's heavy right now in wheat.
Sure. Thank you for that, Brian. Nathan, a couple questions and maybe a couple comments as well. We've seen China start to buy Ukraine corn. We certainly are well aware of the lower water levels on the Mississippi. So what are you seeing from a competitiveness standpoint from Brazil, and what needs to happen to excite corn exports, soybean exports again?
Yeah, so we're definitely seeing competition out of South America, and as you just noted, Ukraine is starting to harvest corn as well. Mm-hmm. And despite the headlines that every other day about a new attack of some sort in Ukraine, the market seems to ignore that from a price standpoint. And reality of it is Ukraine is still shipping grain. And rumors this last week that China bought as many as a dozen vessels of Ukrainian origin corn. South America, as we all know, had a really big crop this last year. They're competitive on beans now into Nov Dec, and corn is competitive all the way into January. So we see we're just going to struggle to compete. They will be the low price provider in the world and undercut us. And our logistics don't help us out either.
Right.
We have the well-advertised low water issue happening on the Mississippi River. A little bit of rain here recently, but we set new record lows on the Memphis gauge. So we got draft levels being cut, toe sizes being cut, we've got dredges happening, we got groundings happening. The river's very dysfunctional, which doesn't help us with the export market. So if we do see an uptick in sales, hopefully that probably leans towards taking some more grain out of the Texas Gulf, which would be rail oriented, or off the West Coast, which would be off the P&W.
Sure.
And of course, the Panama Canal has had some drought issues affecting them as well, which would also lean towards shipping more stuff off the P&W.
Right.
So big picture here, we've got a window on corn, typically somewhere between December and March that we ship corn. Because remember, Argentina's going to have another new crop come on somewhere March, April, May.
Sure.
And if they don't have a drought this year and trendline yields, that crop will be up 20 million metric ton from last year, which is give or take 800 million more bushels than what they had last year to hit the market.
Right.
So we've got competition coming this spring, so we got a really narrow window here. And the more Brazil leaks into our small window of opportunity for exports, it looks like we could take exports down further in corn. And same on beans. Our exports on beans have been underwhelming, and ATI Research already has a export number that's 40 or 50 million bushels below USDA, and if we had a bias, we'd probably take that lower again.
Okay. Seems like the U.S. is becoming a residual supplier.
Exactly. Yeah, the world will undercut us on price.
Absolutely. Thank you for that. Brian, shifting back to wheat, what are your thoughts on soft red winter wheat acres? And certainly the trade seems to think that lower acreage is in play. And would you agree with that statement?
Yeah, I'd have to agree with that, Drew. A year ago at this time, things were lining up very well for the U.S. producer from the standpoint of, number one, the insurance price, which was set from mid-August to mid-September, was outstanding last year. It was a 10-year high.
Right.
But on top of that, the soybean harvest in the Eastern Corn Belt last year, Drew, came off very timely fashion. So they were able to get out in those fields with those drills, get that 2023 soft red crop planted very timely. And we ended up bumping the soft red crop today, almost 450 million bushel, the crop that was harvested this summer. Much different picture for 24, though. We're looking right now, Drew, at an insurance price well below last year. It was established here earlier this month.
Right.
And on top of that, the soybean harvest, Drew, is lagging in the Eastern Corn Belt. It's been a bit wet out there, and they had some more rain this week, and the maturity of the crop is behind normal. So as you look at those two factors together, probably even put a bit more emphasis on the fact that the soybean crop is lagging in harvest pace. We may see a significant drop, Drew, in soft red winter acreage, 10%, maybe even more here in 2024,
okay.
The crop that's being planted this fall.
Sure.
And I'd extend that on into Canada. We're hearing the same trends also up there.
While on acreage, what are your thoughts on corn and soybean acreage as we move into 2024 and beyond?
A lot of moving pieces, Drew, as Nathan highlighted a moment ago. I think the corn market feels heavy right now. When you look at the NOV 24, DEES 24 ratio, it's hovering right around 245 to 250. Already the market's kind of nudging the farmer, if you will, toward that bean planting for next year.
Right.
And Nathan made a great point. If Argentina comes back in 24 and harvests a 50 to 55 million ton corn crop, the world, as it were, could be awash in corn by next spring and summer.
Right.
And I think the producer here in the U.S. here is taking note of that. A year ago at this time, corn was exceptionally attractive. I think we're going to see a pretty decent drop-off in corn acres in 24, Drew. By the other side of the coin, the soybean market is stronger. I think we're going to see an uptick in bean acres in 24. Now, that's a lot can change here from the end of September, but that's our first guess right now. Less corn in 24. I'll throw out a number, 2 to 3 million acres, and 2 to 3 million acres more beans in 24.
Makes sense. Makes sense. Thank you for that, Brian. Nathan, last formal question for the day. End of month, end of quarter today for Q3. Grains have certainly been soft, as have equities over the last few weeks, or at least this month. Crude oil has certainly seen a nice jump. And what does Q4 hold in terms of economic conditions, and what are your thoughts there?
Yeah, big picture, everybody continues to think, look at China, well advertise their property issues, their economy coming back very slow from post-COVID. So, they're putting a lot of stimulus into their economy. So there's a lot of varying opinions on how strong that economy is. So the world's kind of got more questions than answers, I feel like, coming out of Asia at the moment. But, the Fed came out their last meeting and said higher for longer. And the U.S. dollar heard that news and anticipated it. We made a low on the dollar index, sub 100 back July sometime, and now we're back in the 105, 106 area. So not helping us in the export market with the higher, stronger dollar.
Right.
And so we got headwinds there, and then the bulls would tell us we seasonally make lows in corn now, sometime in August, Sep, and we tend to rally post-harvest in corn. And they'd also say we got to try to refill the world pipeline. After last year, we saw a big cutback in corn feeding in the world. And the reality of it is we have a big anchor on the corn balance sheet, and that's a 2+ billion bushel carryout forecasted today. It's just going to be hard to see flat price, want to see a lot of rally in it if we can maintain a 2+ billion bushel carryout this next year. So be very cautious there to the farmer as we see any rebound in prices here to maybe think about rewarding some of those.
Nathan did a terrific job there. I'd like to add on, Drew, a lot of viewers, of course, got the combine out now, and this crop is being harvested as we speak. What to do with this crop? And Nathan made a couple very good points. There's some outstanding carry available in the corn market right now, about 15 cents, 14, 15 cents from December to March.
Right.
And beans is exceptional, Drew, 20 cents to January, 19 to 20 cents. But here's the key thing. We haven't seen these type of carry markets for several years, Drew. A producer looks at that and says, well, I'll just put the crop in the bin. I'd remind the viewers that it's very important to lock in that carry in some form. There are different ways you can do it, because often in a carry market, as Nathan said, the market will grind down, the nearby contract will expire, and then the next contract will grind down to where that contract expired. For example, if December corn were to expire, not a prediction, at $4.50, maybe the March corn expires at $4.50.
Right.
So the key is, as you harvest, look at that, locking in that carry. You can do that with a deferred put option, for example.
Sure.
Locking in that carry. But historically, Drew, what happens in carry markets, if the heavy supply, which Nathan did a terrific job highlighting, persists, that drags down those deferred contracts, and that carry just kind of disappears, as it were. So I would say defend your balance sheet, look at ways, dust off the textbook, if you will, on locking in carry, managing in a carry market. Because, Drew, we haven't seen carry markets like this for several years.
It's been some time. It's been some time. Last question before we depart. Big game tomorrow. Illinois versus Purdue. Nathan, you're a Purdue alumni, and Brian, you're an Illinois alumni. Who's going to be the victor tomorrow?
Oh, it's flip of a coin tomorrow's game. Even though it's in Lafayette, I think the spread is even money. Unchanged, yeah. Unchanged. We've got a new coach this year in Lafayette, which is the ex-defensive coordinator for Illinois. Yeah. So he ought to know who's coming to town.
That's right.
But given those two schools tomorrow, it's a flip of a coin.
Nathan highlighted, I think, is a key, Drew, and I don't want to get too far in the weeds here, but that defensive coordinator for Illinois last year was outstanding. He knows what's the Illini's got coming. So I think Ross Aid's a tough place to play. The fewest turnovers will win that game. But beautiful weekend for football, it sounds like.
That's right. That's right. So, and for harvest. So thank you both.
Boilers.
ILL.
Thank you both for your time today, and thank you viewers at home for watching us. Please don't forget to subscribe to our YouTube channel and hit the notifications as well, and that allows you to see any intel that we put out on a daily and weekly basis. So have a great day. Have a great, safe harvest weekend. Bye-bye.